A very warm welcome to you and many thanks for being with us on this weekend edition of the program. We remain your source for all the latest happening in the world of insurance. On the lineup this week, we see Leslie Ndo, CEO Africa Risk Capacity and Limited, joined straight on the CEO Rendezvous per Skype to discuss Nigeria insurance industry capacity to face emerging risk. According to him, there's need for product innovation to boost retention in the Nigerian market. Let's take in this sale.
Insurers increase their retention, it means then that those funds that would have been shipped overseas can be invested.
What more can I say than to urge you to relax and enjoy the lineup? Details in the moment, please stay with us.
All right, thank you very much. I'm very happy to welcome you to this CEO Rendezvous. It's my pleasure to host Mr. Leslie Ndovu, who is the Chief Executive Officer of African Risk Capacity ARC Limited, a specialist insurance company that provides parametric insurance coverage to African countries against extreme weather events and natural disasters. He's my friend from the AIO. That's how we connected. And I'm happy that you could join us via Skype this morning. Thank you so very much, sir, for being my guest on the program. Today we'll be looking at the risk capacity of the Nigerian insurance industry, critical assessment, especially as it relates to emerging risks. Okay, Mr. Leslie, thank you so very much once again for doing this with us. Let me put in perspective, before we talk about emerging risk and the capacity of the Nigerian insurance market, I'd like to, as an expert, I'd like to pick your thoughts on post-COVID-19. That tsunami came and took the world by surprise. Governments, businesses, and even you guys, insurance, or everyone was caught napping when COVID tsunami came. But my thought is, do you think the world is better prepared in terms of what we saw during COVID, in terms of risk management and even response as we speak in 2024? Let's kick off from that.
Good morning to you, Faith. Good morning, good afternoon, good evening to the viewers. I am really delighted and excited to be here today to talk about my favorite subject in the world, which is parametric insurance. We believe that parametric insurance is an essential part of the overall disaster risk financing spectrum. We are also fully convinced that a lot more needs to be done on the African continent regarding the utilization of insurance. At the African Risk Capacity, or ARC, as we refer to ourselves as, we are Africa's #1 player in terms of providing parametric insurance solutions for climate change on the one hand, as also for health-related risks. Specifically, we are providing insurance against droughts, floods, and tropical cyclones, which are increasing in severity and impact as a result of climate change. On the other hand, we also provide insurance against outbreaks and epidemics, including meningitis and Ebola, which are also quite prevalent on the continent. The major advantage of parametric insurance is that we pay claims based on a model. So we analyze large volumes of satellite data, and on the basis of that, we can determine the severity of an event that has happened. Using this data, we calculate then what the size of the economic loss is and pay an insurance claim based on that. The major advantage then of parametric insurance is that it's highly scalable. I don't need to have visited your hometown. As long as I can get the data, I can create the insurance product. Also, parametric insurance is very objective because the data that we are using to calibrate the size of the claim payments are also available to all our clients, meaning that really the calculation methodology is transparent and is objective. Also, parametric insurance is highly adaptable and scalable depending on the needs. I then come back to the specific question that you've asked, which is a very important question, whether we have learned any lessons from the COVID pandemic and whether we are better prepared. Like most things in life, the assessment is really a mixed bag. On the one hand, we are much better prepared because we have now models that can predict to the greatest extent possible the occurrence of these natural disasters. And also insurance is now proven as a mechanism to pay for some of the costs that are related to this. However, it would be not completely accurate to claim that the battle is won because insurance penetration on the African continent is quite low, and that's the case in Nigeria, but it's not unique to Nigeria, meaning that there is still a lot of room to grow in terms of the utilization of insurance. We are quite active in Nigeria through the work that we do with our partners, and the principle is that when a drought or a flood or a cyclone happens, we stand ready to pay a claim within 2 or 3 days, allowing the farmers that are affected to very quickly resume their economic activities. So we are being helpful to the overall Nigerian economy by providing a sense of business continuity and also strengthening the local insurance and reinsurance market.
Okay, well said, Mr. Aldovo. Now, let me bring you to the Nigerian insurance market. Two things. There are two events that had happened. One was in 2012, where there was massive flooding across about 5 states in Nigeria, River State being the worst hit. And at the time, it cost the federal government a whopping 2.6 trillion naira to manage that disaster. But the second was the Ash NSAS protest that rocked Nigeria. It's 2021. And that also took government and even insurers by surprise because no one in their thinking and in the course of doing business, no one had expected that a third world country, so to speak, would be caught up in those two events that are mostly or oftentimes connected with developed countries or Asia's and all of that. But it's, as I said, it took the insurance industry by storm. But I just want your thoughts in terms of assessment of the capacity of the Nigerian insurance market or the insurance industry. In your assessment, they have the capacity, that's one, and the willpower to actually underwrite or play big in emerging risk, because these risks are almost like a new normal with us today in Nigeria. Your thought?
So the loss of life and destruction of property as a result of natural catastrophes is always very sad and traumatic to go through. Unfortunately, given the impact of climate change, this is something that we are going to experience a lot more often with a much greater severity going forward. So while it's impossible to avoid the occurrence of the events, we can just be better prepared in terms of how we finance the reconstruction efforts. particularly in Nigeria, I will be the first to say that there is a very sophisticated insurance industry. A lot of the expertise has been built on the back of the oil and gas sector, which has very unique insurance needs, compared to the retail type products such as motor. Insurance against natural catastrophes works best at scale and with a diversified portfolio. So we are always happy to work with our local partners in Nigeria on understanding the risk, developing the appropriate insurance solutions, as well as paying the claims when they arise. The size of the exposures are well beyond the retention of the local insurance markets, and they need to be reinsured into the global markets. So players such as ourselves at ARC play a crucial role in linking the local insurance markets to the international reinsurance markets. Also at ARC, at the moment, we are operating in 39 countries all across Africa, and this gives us scale and diversification. On the financial strength side, we are one of the highest rated insurance companies on the African continent with an A- rating from Fitch. We are also the highest rated company globally for ESG, because in our case, ESG is not really something that we retrofit, but is core to our existence. The way we want to grow in the Nigerian market is by working very closely with the local insurance companies in Nigeria, so that we are providing reinsurance. And then also maybe just to draw to your attention that in fact, we have now working with what is called the Insurance Development Forum, which is an international coalition of insurers. We are working with the Lagos state government to create a flood insurance product to then protect the city of Lagos from the devastating impact of any flood that can occur. And this is done fully in partnership with the local insurance industry. So to summarize, I would say there is a lot that has been done, but there is obviously a lot more that needs to be done. And every year we are getting much better at this, and we are providing the solutions that are more closely linked to the needs and to the expectations of our clients.
Thank you very much. Now, one of the major takeaways from both events that I mentioned was the fact that there's still a deficit of covers associated with emerging risks when it comes to the Nigerian insurance market. Today, as we have it, banditry, I'm sorry to say banditry, is like the new normal in Nigeria. It's shameful, but that's a reality as we speak. And you find that not so kidnapping, of course, is taking a new dimension. And these are risks that maybe in time past, you would expect that R&K is for those in the corporate setting or in the oil and gas sector. But today, even the children of the average person are kidnapped, and you hear of huge sum of ransom payment and all of that. So, so when it comes to direct cover for some of the emerging risks that we now see in Nigeria, it's still not there, except you have to. Most of these covers are just extension covers. I don't know your thoughts on that and maybe the way forward.
I agree with what you have said in terms of the rising insurance risks in Nigeria and the scarcity of covers that are designed to cover those type of risks. So then I would also then point out to a number of continental initiatives that have been set up specifically to deal with the insurance of these risks. On the political violence, terrorism, as the class is sometimes called, on political risk and trade credit, there is an African institution called the African Trade Insurance Agency, which is a member state organization that has been created to deal with this type of risks, similar to how us at ARC are dealing with the climate and health related risks, again set up at the request of the African Union member states. At the moment, the way the market is structured is such that these specialty type risks are underwritten domestically, but are heavily reinsured in the global markets. However, there needs to be an increasing retention of the exposures within the continent, because when insurers increase their retention, it means then that those funds that would have been shipped overseas can be invested domestically as well, which then helps to formalize and to improve the economy. In the specific case of Nigeria, there is also quite a strong link between the Nigerian insurance companies and the Lloyd's of London market, where I was before joining ARC. This ensures then the availability of reinsurance cover where it's needed, but also then the transfer of expertise where it is required.
That's our time on the program this week. Thanks for being with us. Join us same time, same station next week for a fresh packing. Connect with us on all our social media platforms. My name is Susan Ibiapo from the team East Dubai.